Canada has just dropped a major bombshell in the financial world.
Well, a new report slams Canadian political leaders' recent efforts to try and break down the internal trade barrier.
Good morning. Yeah, it takes big aim at Ontario, big aim at the federal government. The real thesis of this report is that this might be beneficial, but it's certainly not going to be $200 billion.
Both Ontario and Alberta have taken a bold step by issuing large foreign bonds, effectively locking U.S. banks out of the deal. Ontario's $2 billion bond deal, led by Barclays and Canadian banks, is the first of its kind since 2011 to exclude U.S. banks. This move goes beyond just finance. It's a geopolitical statement. With U.S. tariffs hurting Canada's steel and auto industries.
If you don't have steel, you don't have a country. You don't have a country.
This is Canada's clear response. Time to pivot away from Wall Street. Is this the start of a new financial era in North America? Let's break it down. Tariffs disrupt Canada's financial engine. What began as a tit-for-tat over tariffs has now shaken the financial framework of North America. In June 2025, Ontario issued a $2 billion Yankee bond, its first in over a decade without U.S. banks. Instead, the deal was led by Barclays and several prominent Canadian institutions like BMO, CIBC, and Scotiabank. But was this about securing the best deal? Not quite. This was a deliberate move against the backdrop of Trump's tariffs on Canadian steel, tech, and automotive parts.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel.
Ontario's government, led by Doug Ford, had already made moves to favor U.S. firms in public contracts. But this is an even bolder step. It's targeting the very source of funding. For context, Ontario is home to major automotive factories, Ford, GM, and Honda. So when the province flexes its financial muscle, it has a big impact on the auto sector. By sidelining U.S. banks, Ontario is sending a message. It's no longer playing by the rules set by Trump. The province plans to borrow $60 billion this year, with about a third of that expected to come from foreign markets. That's a massive amount of capital now bypassing Wall Street. And this isn't just a fiscal strategy, it's a geopolitical move. Ontario is gradually redirecting its financial relationships from New York to cities like London and Frankfurt. The message is clear. Canada is charting a new course, quietly but decisively. But Ontario isn't the only province making this move. Alberta takes the off-ramp. Europe steers the wheel. Alberta is also stepping on the gas. Back in March, the province issued 1.25 billion euros in bonds, a deal handled by Barclays, RBC, and TD. While Alberta insists U.S. banks weren't excluded, it's clear that the message has been sent. This wasn't just about securing bonds. Alberta is shifting its oil exports to new regions. Tanker routes are now being redirected to Asia and the Gulf of Mexico. And who's financing these moves? European banks and insurers? Pension funds from Europe are getting involved as well. In short, Alberta is charting a new financial course, with less reliance on U.S. firms and more focus on European partners. European financial institutions are increasingly becoming the backbone of Alberta's financial dealings, including currency swaps and hedging strategies. For Alberta's energy and transport sectors, this shift will have wide-ranging consequences, especially when it comes to sourcing capital, negotiating supply contracts, and getting the right insurance backing. If you're a trucking operator in Alberta, the next financial deal you sign might come from Frankfurt, not New York. Before we dive deeper into these shifts, make sure to smash that like button and subscribe. Canada's procurement shift, buying Canadian, from steel to software. It's not just about bonds and oil exports. Canada's approach to procurement is also changing. Ontario has implemented new rules that favor Canadian and allied vendors over U.S. suppliers. For example, a hospital in Ontario recently opted for a Swedish software supplier over a U.S. one due to cost concerns and currency risk. This shift is happening across a wide range of public sector contracts. For the auto sector, this will mean more Canadian suppliers moving up the ranks, with U.S. suppliers being pushed down. Ontario's factories are going to be recalibrating their supply chains in response to these changing procurement rules. Even British Columbia, while still somewhat aligned with U.S. financial institutions, is starting to shift away from Wall Street. The broader trend is unmistakable. Canada's financial gears are grinding, and the country is shifting into a new lane. Subtle cracks in the dollar's foundation. As Ontario and Alberta steer away from U.S. financial institutions, cracks are starting to form in North America's dollar-based financial system. Traders in Vancouver are reporting some liquidity issues when accessing U.S. dollars, an echo of the 1998 Asian financial crisis. This isn't a cause for panic just yet, but it's definitely something to keep an eye on. Behind the scenes, Canadian financial institutions are beginning to model risk based on the European Central Bank's yield curve rather than the U.S. Federal Reserve. This shift is more than just a technical change. It signals a strategic reorientation in how Canada handles its capital strategy. While the flow of capital between Canada and the U.S. remains strong, some financial institutions are now installing hedges to protect against prolonged trade instability between the two countries. In fact, some funds have already started hedging against this possibility without even moving any assets. Ontario's auto sector navigates turbulence. At the center of this financial shakeup is Ontario's auto sector, which has been hit hardest by U.S. tariffs. Ford, GM, and Honda have major manufacturing plants in the province, so changes in bond pricing, foreign capital access, or procurement policies are not just theoretical. They affect production schedules, labor plans, and even facility expansions. When provincial borrowing moves from Wall Street to Frankfurt, it reshuffles the deck of investors, with new players coming to the table. But this shift isn't without complications. European financiers, many of whom are driven by environmental, social, and governance (ESG) mandates, might hesitate to fund carbon-heavy initiatives. This could create new challenges for provinces like Alberta, which rely heavily on the oil industry, or for automakers still dependent on traditional internal combustion technologies. In the near future, automakers might find themselves needing to convince lenders that their vehicles are not only profitable, but also environmentally sustainable. The final verdict, a breakup with big implications. Let's be clear, Canada isn't just bypassing Wall Street, it's setting up its own financial table. While the headlines focus on bond deals, the real shift is happening behind the scenes in logistics, public procurement, and strategic capital redirection. This isn't just a spat between Canada and the U.S. It's a preview of how countries may respond when economic partnerships become strained. Canada's pivot is slow but steady, and it could reshape the future of North American industries, both in terms of how business is done and who gets to play in the game. So what do you think? With Canada shifting its financial loyalties eastward, could this have an impact on the cars we drive and where they're built? If you found this video insightful, don't forget to hit that subscribe button. Stay tuned for more updates and content. We've got plenty more coming your way.